Welcome back, everyone. It's Monday, November 18th, and gold is back on the rise as geopolitical tensions between Russia and Ukraine escalated during the weekend. In the meantime, euro dollar and pound dollar are looking for a rebound after their recent aggressive sell-off posed near a key support area ahead of a busy week of data releases and central bank comments. So, starting first with gold, the precious metal is looking for a close above the 2600 level. That's where the lower band of this broken bullish channel is placed. So, a close above it could encourage more buying, especially as the RSI and the stochastic oscillators over here hint at oversold conditions. So a break above 2600 could help the price to hit higher levels, perhaps the 23.6% Fibonacci retracement of the June to October uplift at 2672. We can see that the 20-day moving average is also approaching this region. Then above that, I expect some consolidation near 2710 level. That has been a key, that has been a constraining zone over the past couple of weeks, so that could keep the bulls busy before we head towards the 2750 level, a break of which could print new higher highs in the short-term picture and perhaps surpass the 2800 level, which the price couldn't overcome back in October. Now, geopolitical tensions will probably remain under the spotlight as the US approved Ukraine's use of its large-scale missiles within Russia, so things could still go worse before becoming better. Perhaps some updates on the monetary front could be also important to watch, as the Fed's communication has become slightly hawkish, especially after inflation data arrived higher as analysts expected, and retail sales came also stronger than forecast suggested. So that has kind of put additional rate cuts into question. So it will be interesting to see if policymakers will support this narrative. If they become more hawkish, that could push gold back to the downside. And perhaps the 2545 level could keep traders busy, as this is the where the 50% Fibonacci retracement of this uplift is located. So a break below it could take us down to the 61.8% Fibonacci of 2483, and then lower than that, I expect support to arrive somewhere between 2445 and near the 200-day moving average at 2400 at the moment. It's quite important to note that the last time that the price reached the 200-day moving average was a year ago in November 2023. So it will be interesting to see the price reaching that line again in a year. Now looking at euro dollar, euro dollar has hit a new one-year low last week at 1.0495, but it managed to close above the 1.05 level. So that increased the odds for rebound, as the RSI and the stochastic oscillators are pointing to oversold conditions. Perhaps if Friday's business PMI, flash business PMI figures for November are better than expected, that could boost euro dollar to higher levels. And we also have a couple of speeches from ECB policymakers. So any hawkish communication, some optimism perhaps for the Eurozone may boost the euro dollar. We shouldn't forget that growth concerns has been a hot topic during the central bank's previous policy meeting. So any updates on the growth front could create volatility in euro dollar, especially as Trump's presidency may bring fresh risks, may bring fresh trade risks to the euro area. So if the data arrive better than expected, that could provide some boost to euro dollar. I would like to see a break above 1.06 in this case in order to target the June low of 1.0665. Higher than that, the 20-day moving average, this broken support trend line from October at 1.0780 could generate some consolidation before we move towards the 200-day moving average at 1.08. 1.70. Now, if the data are priced to the downside, if we get, if ECB policymakers appear quite concerned about Eurozone's economy, then euro-dollar may reverse to the downside, and a close below 1.05 could further pressure the pair towards 1.04, 1.0450, a break of which could then generate a fresh sell-off towards 1.03. And finally, looking at pound dollar, well, pound dollar, like euro dollar, is still above its above its 1-year-old support trend line from October 2023 at 1.2580 at the moment. So that creates some optimism that pound dollar may have better chances to rebound as the RSI and the stochastic oscillators are moving near oversold levels. However, the focus will fall on CPI inflation data, on UK CPI inflation data later this week. According to forecast, analysts expect the headline CPI to bounce back above the central bank's 2% target, and specifically to 2.2%. So that would mean a stickier inflation, and that could put the central bank's rate cut outlook into could create doubts about how fast the central bank may cut interest rates in the coming sessions. There's a lot of uncertainty about when the next rate cut will take place, so better than expected data could further push back rate cuts in the coming months, and that could consequently help pound dollar to climb above the Oca's low of 1.2663, in which case the 61.8% Fibonacci retracement of this upload over here could act as resistance near 1.2730, and then above that the 200-day moving average and the 1.28 number could be the next target before the 20-day moving average comes into view near 1.2865. Now, in the case this sell-off continues, if the data are priced to the downside, if it's disappoint, calling for rate cuts sooner than previously expected, then pound dollar could slide below 1.2580 and 1.2540. This is where these lines are placed. So in this case, we could see a sharp decline towards the 1.24 or 1.2440 constraining zone, while lower than that, all the attention will turn to June's 1.22 or perhaps the 1.23 round level. So that's everything I wanted to share with you guys. Thank you for watching, and we'll be back soon for our next technical update. Thank you for watching, and see you next time.